China continues to have its eyes on Africa. While the relationship between African countries and China has grown over the years, China is looking to deepen and strengthen its connections with the continent over the next 10 years. We'll get into how and what this also means for others trying to get in good with the continent. Now, while South Africa has taken the EU to the World Trade Organization over its new regulations on citrus, there is a larger economic conversation happening. More EU regulations could take aim at Africa's farm exports. And according to investment experts in South Africa, investments in the country's stocks and bonds will undoubtedly yield the highest returns over the course of the next 12 to 24 months. This is Business Edge. I'm Tolulope Adeleru-Balogun. Let's start with African business headlines. Now, despite bad news, load shedding woes, and ongoing challenges that farmers in South Africa face, many olive growers had a bumper crop harvest. According to South Africa olive data, local farmers produced between 1.6 to 1.7 million liters of extra virgin olive oil over the last 2 years, and production is expected to be at a similar level in 2022, despite varying yields across South Africa's olive growing regions. In East Africa now, some 24 Kenyan bedding firms have been locked out of operations in the current year ending next June for failing to pay a license fee of 100,000 shillings and provide a bank guarantee. Bedding Control and License Board Chief Executive Peter Umbugi said 59 firms have been cleared to operate, while only 35 have paid the fee and provided a 250,000 Kenyan shillings bank guarantee. In the western part of the continent, according to the Nigerian government, the excise charge on telecommunications services will bring in roughly 160.46 billion naira in 2026. The NCC estimates that in 2021, the combined income of GSM, fixed wire, and internet service providers would be around 3.21 trillion naira. The Egyptian Minister of Communications and Information Technology, Amr Talat, signed a memorandum of understanding between Egypt's Information Technology and Industry Development Agency and Valio to expand its investments and business volume in the country. Under the MOU, Valio will increase its exports of software services and provide additional job opportunities for more than 850 engineers based in Egypt, in order to export software to its clients abroad. These are a few of the headlines, business headlines at this time. A quick time out and we'll get into our very first story for today. Stick around. You're watching Business Edge right here on News Central. Now, China is looking to deepen its ties with the continent, with the Economist Intelligence Unit expecting the country to deepen its ties over the next decade by focusing on trade. The research group also expects that China will retain its position as the continent's main trading partner, despite attempts by the United States and the European Union to re-engage Africa. China overtook the United States as a trading partner of sub-Saharan Africa immediately after the global financial crisis of 2007 to 2009. Less affected by the crisis, which some economists called the Great Recession, China's trade with Africa increased while that of the U.S. declined sharply. Bilateral trade between China and Africa rose 35% in 2021 to $254 billion, with exports from Africa hitting a record of $106 billion. Now, Gospel Obele, Chief Economist of Streetnomics, joins me to discuss the future of Africa and China's relationship. Gospel, welcome once again to Business Edge. Thank you so much for joining me.
Hi, Tolu. Good afternoon. Thank you for having me.
So we are obviously decades into what we know has been a very deliberate and intentional plan by China to make inroads into the African continent. So before we look to the future of this relationship, let's look to where the relationship is now and how it's developed over the past several years. So how is China's plan, the Belt and Road Initiative, all of its determination to get into the continent, how has it worked out so far?
Yeah, thank you once again. Great opportunity to be here. We're seeing that over the years, through partnerships, strategic partnerships, infrastructure funding, policy supports, and the likes, China has, worked with Africa at different levels. We've also seen that they have even had to, bring some of their own, to the mainstream labor or technical support engagement, as it were, especially in the infrastructure space. And this is happening on mainstream infrastructure projects. So the Chinese economy, or China, has found its way to sort of like deepen engagement with Africa, probably as part of its strategy as a nation, to begin to look towards global domination or aspire to something of sorts. Yeah.
As one relationship seems to have ripened, we see another relationship that seems to be reducing. After the global financial crisis, China overtook the U.S. as a major trading partner for Africa. So what's affected the trading relationship between the continent and the U.S. Up to this time now?
Well, I mean, a lot of, so first of all, to state that the Chinese economy had, evolved in terms of production over the years. So with globalization, we've seen a situation where even many of the organizations in the United States, global conglomerates, have sort of like a manufacturing plant in China and probably an assembling plant somewhere in California and all of that. So China, the world has sort of embraced China due to its manufacturing prowess and its labor-intensive style of manufacturing and all of that. So that happened due to the globalization conversation. Now, you now have a situation where Africa was positioned, as a market destination, to take products and services. And being that edge the Chinese economy had in manufacturing, Africa became the market, its primary and main market for consumption of its products and services. So that route also led to some form of incentives to create partnerships and sort of like deepen penetration and all of that. I think over time, the Chinese economy just had a very clear strategy, and that strategy outran that of the United States in terms of penetration and building market access and all of that. So that's so far what I think has been happening, over time. And like I mentioned also, it's also a quest for global domination, right? The strategy is to look for markets that are much more open and receptive to your products and services, and it can position as a strategic partner with its key stakeholders, and of take critical amount of wealth and experience and engagement, with those markets, which I think on the flip side, the United States has probably not done effectively at that level. And also on the other side, there are also concerns of trust and engagement with the EU and the US. So that's also on the table.
So we see with the Russia-Ukraine crisis that energy has become a major talking point. But we've seen for a number of years now that the change in energy trends was really going to set the pace for some of the future conversations in terms of trade and economic partnerships that we would expect. But China also has a very strong demand for natural resources that are found here on the continent. So it's coming to us for natural resources, it's coming to us for energy as well. And people are worried that a deepening of this relationship between the continent and China, which has a large population, a large demand, will actually end up exacerbating the natural resource trap that many countries on the continent have been faced with, where we export low-value raw materials and end up importing high-value imported goods and services. The value chain doesn't benefit us in the long run. How do we address an issue such as this when we see that Africa and China particularly has the determination to continue and deepen this relationship?
Okay, thank you very much, Tolu, for the question. So, I mean, it's important for me to state that for every country that comes to the trade table, they most likely come with an agenda, as it were, whether it be good or bad, or be it, short-term or futuristic and all of that, they always come to the table with an agenda. Now, it's also a big challenge if the other person on the other side of the table doesn't have his or her own agenda in the mix of that negotiation. So far, Africa as a continent, or even nations in Africa as a continent, haven't yet defined and decided where exactly they want to play, especially when it comes to comparatively in the scheme of global trade. All right, we haven't been able to define it. And being the fact that we lack a purpose on the negotiation table, it gives the other party an edge, especially if the other party has a form of human material and every form of administrative resource, global capital resource to drive that agenda. And that's what we're seeing here. Even within the AFTA conversation, if you take out China from the table, different African nations, especially nations like Nigeria, do not even have a national forward-thinking policy or a clear purpose to engage on the AFTA. So because we have that gap, all right, we've seen a situation where the Chinese companies or China as an institution or a nation sort of like seems as though, it may be correct in the context, seems as though they're enforcing their positioning on us, and because they're providing funding for the infrastructure projects and all of that, it may seem as a win-win, but there is always an agenda. There is a book written, it's called The China Strategy. Anybody that really wants to understand what's happening needs to go read The China Strategy. And yes, I agree with you. It could be worrisome. It could be worrisome because the goal is to come for your natural resources. There's a form of capital flight attached. It's a form of intellectual and resource recolonization, and it's happening in the form of new dimension when you think about it from technology angle and all of that. So Africa needs to come to the table with something much more solid beyond just partnering for your natural resource. Africa should be self-reliant, to build and sort of like scale. In fact, you also have a conversation of where some economists send people who are, less productive in their countries, maybe due to some jail terms and all that, and they send them to some other continents to work, for some time being, as some form of deal, engagement with the government of the host nation. So we need to go back and rethink our engagements. All right, what are we bringing to the table beyond natural resource? Natural resources are as useless, if you do not have any form of value attached, and that value is being taken to the market. Do not forget that the platform upon which nations are looking for edge or some form of control globally now is on the platform of trade. And if China can capture Africa completely, it's going to be a different conversation in itself. All right. So the era of bullets and all that have ended. It's now the era of strategic trade, strategic negotiations and all that. And if you are caught on the other side of divide as not being ready or strategically ready to partner and engage and lead creative negotiations based on what you can bring to the table, then you'll be at the mercy for that. And that's what's happening here.
So a number of things you said sort of reiterates the red flags we tend to hear from the West when it comes to Africa's deepening ties with China. And we've heard a lot of that in recent years. But many have said that China's engagement with Africa does go beyond trade into being a development partner. And we see that happening particularly with loans. But it's also a catch-22 for many African countries. We've seen the situation with Zambia and Zimbabwe as well. The recent situation in which many believe that China was taking over one African country's airports because of the terms and conditions in the loan. So let's look at that right now. The engagement has really been criticized as being a predatory one. So if we're to look at another decade of Africa-China relations, do you think we need to adjust how these terms and conditions are being put in place? Do you even think right now that relationship, particularly in the terms of development, is a predatory one for China and a loss-making war, at least one that puts Africa on the back foot?
What I know that it's not, it's what I know from my work and research is that it's not a win-win, first off. The individual with a stronger agenda and stronger resources always wins, except if the other party has, enough purview of resources and a clear agenda and a clear value to bring to the table. And in this case, I do not think Nigeria or Africa, has that kind of positioning when it comes to negotiations with China. And it's not just a China conversation, right? I mean, it's okay to say, okay, some other guys in the West may have blamed China and all of that, but it's happening everywhere, right? With the Russian-Ukraine war and all of those things, capital is evolving, and agendas are also flowing to where capital is evolving to or where capital is flowing to. And until we begin to understand these things, that you need to be self-reliant at a point to bring some value to the table so that you can now influence in what direction capital flows in. All right, until you begin to understand that in its context, you may not be able to do much strategically. And unfortunately, I do not really see this as a win-win going forward because there are deeper levels of interest than what meets the screens. All right, there are deeper levels of classified information that are not available to nations upon negotiation. And also to speak again, when you talk about loans, and the Chinese government probably attaching loans, especially infrastructure loans to Africa. You also want to look at the terms behind the loans, right? The truth is, as a negotiator on the table, You cannot influence the terms and conditions if you have nothing to offer. All right. So you have situations where Africa or some countries in Africa, are being need to have like a 30-year plan with China to repay back the loan, all right, from that infrastructure that has been built. And in many cases, you may think that the whole process of the infrastructure is being owned by the country who's building that infrastructure. But actually, it's being owned back again by the Chinese based on the structuring of that loan. I'm trying to be careful with my use of words because these are things that are happening, all right, in the real sense of things. So there are deals happening behind the table, and the level of value you bring to the table is what defines how far you can go with the negotiation, and how valuable you are in the negotiation in its entirety. So I do not think it's going to be a win-win in the future.
Okay, so you've made some interesting points in terms of Africa coming to this table without a lot of negotiating power, not from an advantageous standpoint. But what we also do know is that right now, in a way, we could call the continent the beautiful bride. We are the one that Russia is having a summit with, Turkey is having a summit with, the EU is having a summit with, the United Nations and the United States are having summits with. They're coming here because there's something that they want to take. So I want us to expand a little bit more on this before we wrap up in terms of how we take best advantage of everyone who's offering something with one hand, but obviously wants to take a lot more from the continents with the other.
To be honest with you, Tolu, Africa is rising, and we need to understand that Africa Rising is a potential in itself. There's a book written by Vijay Mahajan, Africa Rising. Anybody who's interested in policy today needs to go back to those kind of books to understand the narratives that are governing the partnership we see today. All right, we need to deeply understand these narratives. Africa has almost the largest market, the strongest youth labor force, or strongest productivity force in terms of labor force as well. So that means that that's a potentially ready market for the future. However, the strategic quick win for Africa is to begin to position the most, productive aspect of its economy, which is to a very large extent, it's entrepreneurs, all right? It's men, it's women, all right? It's human capital. Those are the major backbone of Africa as a future, all right? I mean, you've heard about the men who built America. It wasn't the government who built America. It was the men, all right? So the conversation here is that Africa needs to look inwards and power up its own, all right? Strengthen its own entrepreneurs to compete, strengthen its own educational institutions to be able to compete intellectually with what's coming, all right? And that's our quick win. Once we can put all that together, we would have a solid argument beyond natural resource. Because if you have a natural resource with a very, very incapacitated populace, or poorly structured industrialized capacity, you would have so much leakages that the West and whoever is coming in to partner with you can latch on. So there is need to maximize these quick wins, these strategic touch points, so that you can position your own people as being relevant. For instance, if you want to build a railway now, like what will happen in Lagos-Ibadan Expressway, how many Nigerians were really, really technically involved in the main process of the design and structuring of that plan and its final execution? All right. Not to say there are no Nigerians who can do the work, but how many, its critical mass, are technically powered to be able to deliver not just the same level of results or at a higher level? For the average Nigerian or average African, the bar is higher because you are competing on stronger grounds. You have technologies that you've never seen or heard of, in your life. So there is need for us to step up our game, all right, until we can position the productive arm of our economy, which are the people, all right, and the entrepreneurs, especially the non-oil sector entrepreneurs for trade and all that. Nigeria, for instance, has 90% crop production on the agricultural space. Why should you have 90% of crop production? All right, you have a strong industrial base, but if you notice, the economy is powered by a strong level informal service sector. All right, so we need to power up our agriculture as inputs for for industries rather, and then begin to position those value processed items as your trade argument or whatever it is. The chocolate you provide in Nigeria should be able to compete with the chocolates in the UK or the Switzerland until you can begin to do that from a mainstream non-oil space for your people, your entrepreneurs, your products and your services. you cannot have an edge on the negotiation table. Your currency will not have an edge on the conversation table. And that's what powering up an economy would look like, at least for the low-hanging fruits of this conversation.
All right, Gospel, thank you so much. I know it's one that doesn't end. We will soon talk about another long conversation, another value chain conversation when it comes to the continent. And thank you for your time. We'll be reaching out to you soon. Thank you for having me as well, Tolu. Have a great day. You too. And we're talking about trade in the millions and the billions, and no one goes to another country if they don't think there's something valuable. But are we able to hold on to what is valuable here on the continent and turn it into gold for us here as well? It's a conversation that will continue, and one that we need to look into, as we also will be looking at the EU's new regulations that will be hitting African farm exports. What power really does the continent have when it comes to negotiations and the discussion table? But before that, we get into international business news. Lekan Onabanjo is standing by to give you the latest.
Welcome to International Business News. I am Lekan Onabanjo, and we start by telling you that oil is heading for a weekly loss. WTI traded above $89 a barrel in Asia, with the U.S. benchmark down more than 9% this week. Official data showed U.S. petrol consumption has softened while crude stockpiles rose. The slump comes as Saudi Arabia has boosted prices and OPEC Plus warned of scant spare capacity. Brent's prompt spread, the gap between its two nearest contracts was $1.62 a barrel, down from more than $6 a week ago. Now, the London Stock Exchange Group announced today that it is launching the first tranche of a £750 million share buyback immediately, and it will be executed over the course of a year. In its results for the first half to June 30, 2022, the Stock Exchange posted an adjusted pre-tax profits of £1.3 billion, up from £1 billion a year earlier. The exchange said total income grew to £3.6 billion, up 24% from £2.9 billion in the first half of 2021. Meanwhile, the Bank of England has warned that the UK will start falling into a recession that will last over a year as soaring energy prices continue to hammer the economy. The BOE forecast the UK economy would shrink in the last quarter of this year and steadily through 2023. This will be the longest downturn since the 2008 financial crisis and a grim economic outlook. The UK gross domestic product is estimated and expected to fall by 2.1% from peak to trough, similar to the recession of the early 90s. Twitter has dismissed Elon Musk's claims that he was hoodwinked into signing the deal to buy the social media company. In responding to Musk's claims in a Delaware court filing, Twitter described the claims as implausible and contrary to fact. Twitter claims Musk is slow-walking the trial over the $44 billion deal. The San Francisco-based company is pushing to resolve months of uncertainty over its fate as the world's richest man tries to walk away from the deal for what it says is Twitter's misrepresentation of fake accounts. Musk made the claims in a countersuit that he filed on the seal last Friday, which has now been made public. Stocks in Asia climbed along with U.S. equity futures on Friday, helped by gains in technology shares, and oil snapped a slide as investor sentiment steadied after another turbulent week. An Asian equity index rose 0.9%, while the S&P 500, Nasdaq 100, and European contracts posted modest gains. Taiwan recouped losses fueled by U.S. House Speaker Nancy Pelosi's visit, a jump that may have helped the wider mood. The 10-year Treasury yield was steady at about 2.69%, and the dollar edged up. And those are the stories we have for you from the international business scene. After this break, the conversation focuses on farm trade between the EU and Africa. Do stay with us.